Hello everyone, this is Toni Turner and welcome to the market now as of about 11 a.m. Eastern on Friday, October 21st. Well, the dollar rose to its highest since February against a basket of currencies today as investors weighed the likelihood of higher U.S. interest rates. A measure of world stocks dipped. The euro hit a 7th-month low against the dollar after the European Central Bank left its ultra-loose policy unchanged on Thursday, but kept the door open to more stimulus in December. The dollar was also bolstered today by comments from New York Federal Reserve President William Dudley earlier this week said that the Fed was prepared to raise U.S. overnight interest rates. And of course, that usually takes the U.S. dollar higher. And of course, because of that, this morning, the U.S. markets gapped lower. Let's take a look at that and some charts that could give us some insight into the week to come. Okay, this is a chart of our S&P 500 SPDR, symbol SPY. As you all know, this is the ETF that closely follows our benchmark S&P 500 index. We look at this chart and we follow the S&P 500 because in bull markets, 3 out of 5 stocks tend to follow the S&P 500 higher, and 4 out of 5 stocks tend to follow it lower. So that is why we watch the S&P 500. It's kind of a crystal ball for most of the stocks in our portfolios. So as you can see today, when I captured this chart, the SPY was trading at $213.11. which is approximately 2131 on the S&P 500 itself. Now it is trading below its 50-day moving average, the green line on this screen, the 20-day moving average, the red line on this screen, yet it's still above, thank goodness, the 200-day moving average, which is moving up underneath price, moving slightly at an upward angle, and that's bullish, of course. Now, as far as this blue trend line that I drew earlier, actually I drew it last week too, you can see that it was support. It was acting as support. Now, though, price has fallen below it, so it is no longer support. Now it is acting as resistance. So resistance-wise here, over the S&P 500, we have the very strong 50-day moving average, a little less strong 20-day. We've got the trend line as well. We have price as well. So the S&P 500 here is actually under some pressure, at least technically speaking. Now we had good results, earnings results that came out on Microsoft last night and on McDonald's. However, GE came out with lower earnings, and that is another reason the market is pressured lower this morning. Despite the other good earnings, the bad earnings took it down. And of course, had they not been so good, it would have even been down lower. So the market here is kind of noodling along. It's kind of wandering. It traded at these up near and at its highs back in July, August, fell down below the 50-day moving average, as you all know, on remarks from a Fed president. Then we got our announcement that rates would not be raised in September. And then the market walked along this trend line, but recently, a week and a half ago or so, it fell back down. It fell down and came down to that $211.21 level. So now we're watching that. It's kind of a minor support level, but heck, it's what we've got, and we'll watch it. We know that there's, what we're seeing here is the SPY kind of wander sideways now, yet another floor lower. We have support, we'll call it 211, resistance around 215. We'll see if it can maintain at least these levels through earnings season. It's not so much that it fell. What matters, as we said last week, does it have the strength? Does it have the buyers to move back up and stay up closer to 215 or close above it? Now, we do have this coming week and the next week are very strong earnings weeks. Hundreds of S&P companies will be reporting. That matters. Also, we still have the European banking situation. We certainly have political risk. And again, we have movement of the US dollar. And that's what we're going to watch next. This is a daily chart of the PowerShares Deutsche Bank US Dollar Index, symbol UUP. We're looking at this chart. This is a index of major U.S. currencies against the U.S. dollar. And as you can see here, the U.S. dollar has been rising pretty dramatically. When I captured this chart, this particular ETF that follows the U.S. dollar was trading at $25.53. And you can see at what a steep angle it has been climbing ever since Fed governors have been talking about, yes, we're going to raise interest rates. You can also see this volume that's come into it. Now, we must note here that it has gone up very dramatically. So the RSI here, 14-day RSI, is over 70, meaning in the short term, the U.S. dollar is overbought. If that will have any kind of pressure, any kind of profit taking in here, we'll bring it back down. If that does happen, we do have a little support here, a little support at $25.37. Should it pull back, a little more support here at $25.20, back from the July highs. So we'll have to see. If this U.S. dollar continues in this uptrend, then we could see more pressure on the multinationals, on companies such as GE, and much of the rest of the market. So we're going to have to see how that works. But keep an eye on the UUP. If it continues higher, again, this could pressure our broad markets lower. Our last chart today is one that we haven't looked at in a long time, but it's really gotten my interest lately. This is the SPDR S&P Metals and Mining Exchange Traded Fund, symbol XME. I've been looking at some stocks or some components in this particular ETF. It has 27 holdings. Top components are AK Steel, Worthington Industries, U.S. Steel, Steel Dynamics, and Commercial Metals, among others. Again, I've been looking at some of the metals and mining stocks in this ETF, and some of them are really looking positive. Now today, when I captured this chart, the XME was trading at $26.02. You can see that it made, ever since the middle of January this year, it's traveled in a pretty darn nice uptrend most of the time until August, when it fell down, when it started heading lower, excuse me, in August and September. But then it rallied back up, hit its 50-day moving average, could not maintain that level. It was rejected by that line, moved back down. But then what's interesting here is it made, can't draw a straight line, but it made a higher low down around 24. Since then, it's been moving higher. Again, if you look at stocks like AK Steel, U.S. Steel, Steel Dynamics, some of those, they are all pretty interesting. So what I'm going to do here is I'm going to watch the XME. I'm going to see if it can move up and above this falling 50-day moving average. The RSI here has hooked up and it's trading in a neutral zone. The MACD is just under the zero line, and it would be if the price is under the 50-day moving average. I'm going to see if the MACD can move higher. I'm going to see if the XME can move above and close above the XME for, above the 50-day moving average for 3 days in a row. That's my criteria. If it can do that, and if some of these companies come out with good earnings and price goes higher, I think that could push the XME back up toward potentially the 28 to 30s area in coming months. So keeping an eye on the XME is something that may become interesting. Okay, and now let's go on to next week's economic reports. But first, please join us on Monday, October 24th, for our next session of Toni's Market Club. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. This is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. For those who cannot attend our live session, no problem. The recording of our session is available to all of our members just a few minutes after the session ends. And now for the coming weeks, economic reports. Please remember first that we are smack dab in the middle of earnings season, and earnings results from the generals, I call them, or the large cap momentum stocks will be able to move the markets, just like GE did today. Okay, economic report-wise, Monday, not much going on. Tuesday, we have the Case-Shiller Real Estate Index and consumer confidence. Wednesday, we have new home sales and our usual crude inventories. Thursday, we have durable orders, our usual jobless claims, pending home sales, and of course our usual natural gas inventories. On Friday, we have the gross domestic product report and the Michigan sentiment. Again, join us for Tony's Market Club this coming Monday. Don't miss out on this fantastic opportunity to raise your trading knowledge and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.